On April 2, 2025, President Trump dropped a bombshell on the global economy. In a move that caught many by surprise, he announced a series of sweeping new tariffs aimed at protecting American businesses and industries. This announcement, which he dubbed Liberation Day, was intended to mark a new era of economic independence for the United States. He announced sweeping new tariffs, a move he dubbed Liberation Day for American businesses. The president stood firm at the podium, flanked by American flags, as he detailed his plan to impose tariffs on a wide range of goods from multiple countries. This bold move was designed to reduce the trade deficit and bring manufacturing jobs back to American soil. These tariffs targeted a broad range of goods from multiple countries. From electronics to automobiles, and even agricultural products, no sector was left untouched. The administration believed that these measures would level the playing field and give American companies a competitive edge in the global market. The president argued that these measures were necessary to protect American jobs and industries from unfair competition. He emphasized that for too long American workers had been at a disadvantage due to unfair trade practices by other nations. By imposing these tariffs, he aimed to revitalize the American manufacturing sector and ensure that American workers could compete on a fair and equal footing. This decision marked a significant escalation in President Trump's protectionist trade policies. It was a clear signal to the world that the United States was no longer willing to tolerate trade imbalances and would take decisive action to protect its economic interests. The administration's stance was that these tariffs were a necessary step to secure the nation's economic future. It came as a shock to many, despite his long-standing rhetoric on trade. Business leaders and economists had mixed reactions, with some praising the move as a bold step towards economic sovereignty, while others warned of potential negative repercussions. The newsrooms buzzed with activity as analysts scrambled to understand the full implications of the new tariffs. The world braced itself for the inevitable fallout, with many fearing a full-blown trade war. International leaders expressed concern over the potential for retaliatory measures and the impact on global trade relations. Stock markets around the world reacted with volatility, reflecting the uncertainty and apprehension that gripped the global economy. As the dust settled, it became clear that this was just the beginning of a new and uncertain chapter in international trade. The market reaction was swift and brutal. Investors, caught off guard by the announcement, dumped stocks in droves. The sudden imposition of tariffs sent shockwaves through the financial world, creating a ripple effect that was felt across various sectors. Panic set in as traders scrambled to offload their holdings, fearing further losses. The uncertainty surrounding the new trade policies led to a massive sell-off, with investors seeking safer havens for their capital. The Dow Jones Industrial Average plunged, shedding thousands of points in a matter of hours. This dramatic decline was a stark reminder of the market's vulnerability to geopolitical events and policy changes. Meanwhile, the S&P 500 suffered its worst single-day loss in years. The broad-based index, which includes a diverse range of companies, reflected the widespread impact of the tariffs. Even the tech-heavy Nasdaq Composite, usually resilient to such shocks, took a significant hit. High-growth tech stocks, which had been market darlings, were not immune to the sell-off. Tesla, a bellwether for investor sentiment, saw its shares plummet by double digits. The electric car manufacturer, heavily reliant on global supply chains and international markets, became a symbol of the tariffs' potential to disrupt American businesses. The company's ambitious production targets and expansion plans were suddenly thrown into question. Investors worried about the increased costs of imported components and the potential for retaliatory tariffs from other countries. The market sell-off wiped out trillions of dollars in value, a stark illustration of the economic anxiety gripping the nation. Headlines screamed of a financial meltdown, and the mood on Wall Street was one of despair. The broader implications of protectionist policies were now painfully clear as businesses and consumers alike braced for the fallout. Beyond the immediate market turmoil, broader economic indicators paint a worrying picture. Inflation, though tamed from its peak in 2022, is creeping upward again, fueled by the tariffs' impact on consumer prices. The Federal Reserve, having aggressively raised interest rates to combat inflation, now faces a dilemma. Unemployment, a lagging indicator, has also begun to rise. Layoffs, particularly in manufacturing and export-dependent sectors, are on the rise. The Atlanta Fed's GDP now, a closely watched economic model, has slashed its growth forecasts, with some experts even predicting a recession. The tariffs have reignited a fierce debate about the costs and benefits of protectionism. Supporters, echoing President Trump's rhetoric, argue that the tariffs are necessary to protect American jobs and revitalize domestic manufacturing. They point to the potential for reshoring, with companies bringing production back to the U.S. to avoid tariffs. Critics, however, warn of a Pyrrhic victory. They argue that the tariffs will harm American consumers, who will face higher prices for everyday goods. They also fear retaliatory tariffs from trading partners, which could devastate American exporters and further disrupt global supply chains. The international community has reacted with a mixture of dismay and anger. The recent policies have not only disrupted global trade but have also strained diplomatic relations. Leaders from various countries are expressing their concerns over the potential long-term impacts on their economies and the global market. The atmosphere in international conferences has become increasingly tense, with many fearing the onset of a new era of economic instability. European leaders, already at odds with the Trump administration on numerous issues, have threatened to retaliate with tariffs of their own. The European Union, which has been a strong advocate for free trade, finds itself in a precarious position. The potential for a trade war with the United States has led to heated discussions among EU members, as they try to formulate a unified response. The stakes are high, and the decisions made in these meetings could shape the future of international trade for years to come. Some even suggest suspending investments in the United States, a move that could have serious repercussions for the American economy. Financial analysts are closely monitoring the situation, as the uncertainty has already started to affect stock markets worldwide. The downturn in market graphs is a clear indication of the growing anxiety among investors. Businesses are re-evaluating their strategies, and there is a palpable sense of unease in the financial sector. China, often the target of President Trump's trade ire, has vowed a firm and proportionate response. Chinese officials have made it clear that they will not back down and are prepared to take necessary measures to protect their economic interests. The diplomatic meetings between Chinese delegates have been intense, with discussions focusing on how to counteract the tariffs imposed by the United States. The Chinese government is determined to show strength and resilience in the face of these challenges. The prospect of a full-blown trade war with tit-for-tat tariffs escalating between the world's two largest economies has sent shivers down the spines of investors and policymakers alike. The financial markets are in turmoil, with traders and business professionals anxiously watching the developments. The falling numbers on financial news tickers are a stark reminder of the potential economic fallout. Policymakers are scrambling to find solutions to mitigate the impact, but the path forward remains uncertain. The global economy stands at a crossroads, and the decisions made in the coming days will be crucial in determining its future trajectory. Amidst the market turmoil and economic uncertainty, consumer confidence has taken a nosedive. The Conference Board's Consumer Expectations Index, a key gauge of consumer sentiment, has plummeted to levels not seen since the Great Recession. Consumers, faced with rising prices and anxieties about the future, are tightening their belts. This decline in consumer spending, a key driver of the American economy, could have serious repercussions. A slowdown in consumer demand could ripple through the economy, leading to further job losses and business closures. Faced with a faltering economy, the government faces a difficult choice: stimulate or stagnate. Some economists argue for a large-scale stimulus package to offset the negative effects of the tariffs and boost consumer spending. They point to the potential for infrastructure spending and tax cuts to jumpstart the economy. Others, however, caution against further government intervention. They argue that a stimulus package would only exacerbate the already ballooning national debt. They advocate for a more measured approach, focusing on easing the burden on businesses and encouraging private investment. As the economic outlook darkens, the specter of recession looms large. The combination of market turmoil, rising inflation, increasing unemployment, and plummeting consumer confidence has raised alarm bells for economists and policymakers. The current situation bears an eerie resemblance to the lead-up to the 2008 financial crisis. While the causes and specific circumstances differ, the underlying anxieties are strikingly similar. The fear is that the tariffs, intended to protect American interests, could ultimately trigger a domino effect, leading to a global economic downturn. The long-term effects of President Trump's Liberation Day tariffs remain shrouded in uncertainty. Will these measures achieve their intended goal of revitalizing American manufacturing, or will they ultimately backfire, harming American consumers and businesses alike? Only time will tell. What is certain is that the global economy has entered a period of heightened volatility and risk. The coming months and years will be crucial in determining whether President Trump's gamble will pay off or plunge the world into a new era of economic turmoil.